Ladies and gentlemen, welcome to the webinar. I firstly would like to wish you all a very happy new year. Secondly, I'd like to thank you all for taking time out of your busy schedules and listening to me for approximately an hour. Absolutely, Swati. Welcome. I have to be honest with you guys. A lot of the names I recognize on the participant list. Some of you have taught advanced tax within the ACCA qualification, and a lot of you were my first ever VAT batch students. So welcome, guys. It really is emotional to be back on the screen with you guys being part of the audience. Happy New Year, guys. Again, thank you so much for your kind words. There are a few of you who I don't recognize, and therefore you haven't perhaps studied at Kaplan or done a course with me directly. That doesn't matter. I wish you all a very good 2023, happiness and health, most importantly, and of course, I'd like to thank you for being here. I'll give you a quick introduction. I'd also like to just say, if anybody can confirm on the chat panel, I think I get the answer there. Can you hear me and see me? That's all I want to know for the moment. And of course, can you also, thank you, Sridevi, Hamid, Gana, thank you. Can you also just confirm that you can see the screen? Brilliant. The screen has the Corporate Tax UAE webinar on it. Perfect. Thank you, Kuram. Guys, it's so good to have you with me. Now, if I don't sound a little bit normal, there are two reasons for it. Number one, it's probably because I'm not normal. And secondly, I've got a small little cold, fluish symptoms that is running. So I'm a bit nasal. So I apologize for that. I can assure you I don't have COVID, so that's a good thing. But I do have a cold, fluish symptoms that started this morning. So I'd like to introduce you all to what the plans are today. Why is it that I'm inviting you to this really important topic? What is it that we do here in Kaplan? And what are, most importantly, the potential benefits? Thank you, Gana, for your kind words there. Thank you so much. What are the potential benefits of doing this particular diploma in corporate tax with us at Kaplan? I really am extremely excited. Those of you who've studied VAT with me, and I know who you are, a lot of you are on this particular webinar, and thank you for it. You know that this is a really important discussion that we were having. I was saying that there will be corporate tax introduced in the region legally. We had the public consultation document, but on the 9th of December, the legislation was released. 60 pages of the legislation was released. I'm very excited that that legislation has finally made its way to the public. And I am very keen to design our first ever corporate tax diploma around the release of the legislation. I'll make a few points clear. The legislation, as a lot of you have pointed out, ladies and gentlemen, is not complete. It gives you a really good skeletal framework of what the FTA, the Ministry of Finance, and the cabinet ministers are thinking. It's a really good platform. Swati, we do miss Sunil's voice. You're quite right. Who knows? Sunil might have a few questions later on for us. Now, just to make this clear, ladies and gentlemen, we have a really good template, a template that has been released on the 9th of December. There are still quite a lot of little details that are still pending, either a cabinet decision, a ministerial decision, or an FTA decision. They're still pending. But there is no reason why we can't be ahead of the population in general and start with a diploma that takes and deals with the information which is currently out in the legislation. I'll get to that detail in due course. So let's move on. All right, just to give you a little idea as to what's going on. Firstly, those of you who don't know me, ladies and gentlemen, I've been a tax specialist from the UK. I've been teaching tax within all of the UK accounting qualifications, which includes the ACCA, the ICAEW, and believe it or not, there was a qualification, or there is still a qualification called CIMA in the UK, which used to have a big tax paper. Tax is now a small part of that legislation, but I've been teaching taxation, exam-based and practically since 1998. This is my baby. This is what I love to do. My main aim is to impart knowledge of the legislation to all those who are likely to be affected by corporate income tax. Whether you are running your own business or whether you are working in an organization in either an accounting or tax function, this program is of incredible use to you. And I want to be the one to deliver it. So that's enough about me. I've been doing this for a lot of years. A little about the organization that I work for. I've been working with Kaplan since 1998. Kaplan opened its doors in 1958. It's been doing, what does Kaplan do, you might ask me? Guys, Kaplan is in the business of providing education. That's the core business. We are not tax advisors. We are not tax consultants. What we do, and I think we do really well, is design courses and qualifications to enable the general population to get to grips about taxation in their region. That is my role. I head the tax function in this region for Kaplan. I design the programs. Nobody else does, guys. I create the materials from the legislation with my team. We design it in-house and we then deliver it to try and make sure that everybody who enrolls on our programs gets full access to the understanding, the principles, the practices of the legislation as proposed by the relevant authority. We don't advise companies on how to run their tax affairs. That's not what we do. But we make sure that their employees, we make sure that if you run your business, you are well equipped, up to date with all the tax legislation and how it might impact you on a day-to-day basis. That is our role, and that's what this qualification does. I'd also like to say, before I go through the agenda, if any of you have a question, you know what to do, guys. You can chat with me, with everybody in the chat panel. I've already sent out a message, welcome you all on the chat panel. Please make sure that your questions are available to everybody. I want everybody to have a look at it. So any questions you have at any point, get in touch. Use the chat panel. I'm going to make this brief. I'm going to start off with a quick introduction. Important. I'm going to then talk to you about a little bit about the legislation, a couple of key points about the legislation, and then I would want to spend the rest of my time with you all telling you what we're going to do about it. What do we have in store for you all? The Kaplan diploma in corporate income tax is what we'll finish off with. So let's start this off. Introduction, followed by the effective date and administration, followed by the tax rate, followed by who's the person or which persons are affected in the purview of corporate tax. Something about free zones, because that's a real hot topic, guys. Lots of businesses in the free zones want to know whether they can benefit from the tax holiday, number one. And number two, what is it that they need to do in order to benefit from the tax holiday? Those are really important points. Some legislation is out, some legislation is still pending. Let me make that clear. And like I said, we finish off with my diploma. Information about that. So, quick introduction. I've already mentioned this. 9th of December 2022, happy birthday. The UAE released the long-awaited the federal decree law. It's number 47 of 2022. That's the title, on the taxation of corporations and business, which we refer to as CT law. That's corporate tax law. Now, a number of the basic aspects of this legislation released on the 9th of December have already been published in the public consultation document, which was released earlier last year in the month of April. The public consultation document will be referred to as PCD from now on. So, public consultation document came out. It took consultation from a lot of businesses and corporations in the UAE. And subsequently, on the 9th of December, they've released the official legislation, 60 pages long. And the good news is that the CT law, the law released on the 9th of December, is largely consistent to what was mentioned in the public consultation document. But like I said, guys, a lot of the little nitty-gritty areas have yet to be clarified either through a cabinet decision, a ministerial decision, or of course, by the Federal Tax Authority themselves. And we'll talk about how that impacts the course. Very important. Now, I'm sorry about this slide, guys. There's a lot of information on it, but I'd like to make one point clear. May I? This is quite important. The first thing that I'll tell everybody who is likely to be affected by corporate income tax, first thing is do not panic. There is no reason for you to worry too much at this stage. However, when I say do not panic, I don't mean be complacent. Being complacent is different to panicking. You need to start thinking very seriously about the impacts of corporate tax to your business. But you don't need to panic. Why? Well, here's the reason why. As you all know, this legislation will only be effective on businesses and corporations, provided their financial year starts on or after the 1st of June 2023. Now, I'm going to open this to the public. Does anyone know what is the most common financial year? The financial year of a business normally starts when? Can anyone give me an idea in the chat panel? Most businesses in the UAE and corporations have a financial year that follows what? Come on then. Chat panel. Yeah, excellent, Ali. Thank you, Nita. Thank you, Gana. Thank you for being involved there. Myrna, welcome as well, you guys. This is so emotional. Saeed, thank you as well. Lots of answers. Thank you, Ashley. Mohammed. Guys, you know, I got to be honest with you. It really feels like we're doing the corporate tax course already. It really does feel like that, given all these names. But guys, thank you for your answer. You're quite right. Guys, the financial year for businesses will follow the Gregorian calendar year, which is January to December. Financial years are basically calendar years for most businesses and companies. Not all of them, but for most of them. So let me make this clear. The first financial year where business income will be subject to corporation tax if your financial year is January to December will be the 1st of January 2024 to the 31st of December 24. So the first financial year starting on or after June 23, if you prepare accounts from January to December, is January 24 to December 24. First point. Now, here's the other good news. Can I just give you a little bit of administration? The corporation tax for the 1st of January to the 31st of December 2024, don't forget that will be your first financial year, which will fall within the corporation tax rules. That tax is not due for payment for 9 months after the end of that financial year. That would mean the corporation tax, the first corporation tax payment for such businesses is not till the end of September 2025. And as you all know, today is the 4th of January 2023. So you're looking at, there's a good 2.5 years or a little bit more for those businesses with a January to December financial year to actually make their first payment online to the Federal Tax Authority. There is, ladies and gentlemen, some time. Let me give you another little rule. People have asked me these questions. They've asked me, Amma, do businesses and companies have to submit a return earlier than the 9 months after the end of the accounting period, the financial year? The good news is UAE businesses only need to pay and file one corporation tax return for each financial year, and that will be paid and filed from the information in the law 9 months latest after the end of that financial year. So there's no reason to pay tax in advance. There's no corporation tax payment in advance. There's no filing in advance. There's none of that scenario. So it makes the admin process a little bit easy. It gives you a lot of time, not a lot, but it gives you some time between now and actually having to pay the corporation tax. It gives you a little bit of time. And that's what this course is for. This course is designed to give you all the head start, the stuff that you have to know between now and your first filing of the corporation tax return. That is what I am going to focus on through the information which has already been released, the 60-page decree law, and more importantly, through the information that will be released slowly but surely over the next coming months. And I'll tell you how you can all get access to it, even if you book the program that is going to start the following Sunday. I'll tell you all about that. So, like I said, guys, This is important, but there's no reason to panic. It's important to start planning, but not panicking. I'd also like to make one more administration point. The FTA have said that the GAR rules will apply from the date the legislation is released, not the date from which your financial year falls for corporate tax. So I'll tell you what that means. By the way, GAR stands for General Anti-Abuse Regulation. So I'll tell you what I'm going to say. If you're running a business in the UAE and you're looking to organize your business structure with corporate income tax in mind, what you cannot do is organize your business activities structure with the view of simply avoiding corporation tax. That's from today. I'm talking about from now. Because the GAR rules, the General Anti-Abuse Rule, says that if you have designed, altered your business processes, structures, layouts, purely with the view of avoiding tax, when it comes to filing your return, whenever that is, ladies and gentlemen, all the tax avoidance that you have undertaken, so all the procedures, policies that you have undertaken strictly just to save tax will have to be reaccounted for in your first filing return. So what I'm trying to say, guys, is you can't just structure your business simply with the view of avoiding tax. You cannot do that. There has to be an economic, commercial, business reason for doing so. So it's very important that you structure accordingly. I want to give you an example. I'm sorry if I'm harping on about this, but this is important. I just want to give you an example as to what I mean. Guys, I'm from the UK. I mentioned that to you. I started working with Kaplan in 1998 in the UK. I'm a UK tax expert, and I have moved to the Middle East. As soon as the tax was introduced in the UAE, I moved here to give everybody the chance of understanding and learning the implications of tax in this region. I've said this already. Let me give you a storyline. If you run a business in the UK, guys, let me just say this. There are two ways of running a business anywhere in the world. And here they are. Can I keep it simple? Number one, you can either run a business as an unincorporated business. What does that mean? You are the owner of the business. The income earned by the business is taxed in your hands. You and the business are the same thing. So if you're a sole trader in the UAE, you run an unincorporated business, the income earned by that business is your income, and that income would fall under the purview of corporate income tax, just the business income. We'll get to that later. The other way of running the business in the UAE is not through an unincorporated vehicle, but through a company, an incorporated vehicle. So you can run or create a limited liability company. Don't forget, the company is a separate legal entity, and you are then the shareholder of that particular company. So you can either run it under your own name, or you can run it through a company and you're the shareholder. Now, I'll tell you what people have said. Let me just make this clear. People have said, Amar, I've got a really good way of reducing my tax bill to such an extent that when corporate income tax comes into force, my business will not have to pay any tax or very little. I asked them, what are your thought process? And a lot of them tell me, as the owner of a limited liability company, what I can do is I can extract the profits of the company in the form of a salary. After all, I'm an employee of that company. I can pay myself a huge salary, a salary that will wipe up my profits to such an extent, because don't forget, salary paid to an employee is a tax deductible expense for the company, right? So you can deduct the expense from your profits prior to applying the tax. And the good news is, guys, salary paid to any individual is not subject to tax in the UAE. So a lot of people are thinking, let's pay the entire profits out to the shareholders, which is myself and my family members, 2 or 3 of them. They are the shareholders. We'll just take all the profits out in the form of a salary, no problems. Our profits reduce, the income is not taxable in our hands. Well, I've got some news for you. Because in the UAE, employment income is not taxable, and salary paid to the employees in essence is allowable for the company who's paying it, so you can deduct it for tax purposes. The legislation has said that if you are a related party of the company, or if you exercise control over the company, I don't want to give you too much detail of what that is, but basically being a sole shareholder of a company will simply mean that you are clearly a related party exercising control. Any payments made to such persons cannot exceed what the FTA have described as the market value. So it's really important to realize that if your business earns 1 million dirhams of profit, you can't just extract that profit in the form of salary by paying yourself 1 million dirhams of salary. It doesn't work like that. So these are really important points that you have to consider. How much salary can you withdraw from your business? The answer is, it depends on the going rate, the market value. What are the other people doing a similar job getting? I'm just giving you a little storyline of the kind of thought process that needs to happen. You can't just avoid tax by paying all the profits out in the form of a salary. It just doesn't happen. Let's move on. Now, you know this, guys. This is just to give you an idea. What is the rate of CT of some questions coming up? Arsalan has asked us a very good question. Arsalan, if you just bear with me, I will answer that separately. To answer your question, if you are a natural person, if you are an individual, and if you're running a business in the UAE, corporate tax is applicable. Corporate tax is applicable not only to corporations, but also to individuals. That is why it's called corporate income tax. So to answer your question, sole trader establishments are definitely subject to corporate income tax as long as they are conducting an activity, a business activity in the UAE, Arsalan. That's really important. So it's very important, if you're running a business, you need to think about how should you run that business in the UAE now? Should you run it as a sole establishment, or should you run it through a corporation and be a shareholder in that company? These are really important discussions, which I will have through our, obviously through our diploma. But I hope that answers your question, Arsalan. I'm conscious of the time. I don't want to run over. So, guys, corporate tax rates, really simple. If you're not a large multinational company, I'm not going to go into the details too much, guys, but large multinational companies with turnover in excess of around 3 billion dirhams, they fall under a different pillar. And such discussions are not included in the legislation yet. But large multinationals might be subject to a corporate tax rate of 15%. I wouldn't worry about that too much. I'm saying 15%, that hasn't been confirmed yet. That's to do with the OECD rules. It's to do with BEPS, which is base erosion profit shifting, Pillar 2 rules. That's something completely different. All I'm going to say is most businesses in the UAE, ladies and gentlemen, most businesses in the UAE will be subject to corporate tax at 9% as long as their taxable income exceed 375,000 dirhams. So for every fill above 375, 9% would be the corporate tax rate. Subramaniam has asked me a really good question, guys. He's asked me how much salary is allowed to pay for the business partners. Now, Subramaniam, I'm afraid to say that answer is not a black and white figure. It depends on the industry you're in. It depends on what is perceived to be an arm's length price, the market value. So these are discussions that we'll have through the program. It depends on the industry you're in. It depends on what other people doing similar jobs get. So to answer your question, it's not a black and white answer. And we still need a little more detail from the legislation of how that will work. I hope that helps. I know it's not a full-on answer, but there isn't a black and white answer. I can't tell you the figure is 250,000 dirhams. I can't say that. That's not true. There are lots of factors that you need to take into consideration if you're withdrawing a salary from a corporation. If you run your own unincorporated business, if you withdraw a salary, that's a withdrawal of profits, and that's not allowed in any case. So we'll talk about that subsequently. But don't worry about that too much, Subramaniam, at this stage. I hope that helps. Let's move on. Any questions, just keep typing away in the chat panel. Now, because I was just asked this really good question, and again, I'd like to thank, I think it was Arsalan who asked me the question about who the taxable persons are. Can I just give you, again, a little bit of a general look on what it is? So guys, let me confirm, if you are an individual, I don't care where you're resident. You might be resident in the UAE, you might be resident in the UK. It doesn't matter where you are in the world. Let me make that clear. If you are an individual and you're engaged in business in the UAE, corporate income tax will apply to you. Simple as. If you are not a natural person, you're a legal person, a judicial person, sometimes referred to as, i.e. a company, again, you might also be subject to corporate income tax legislation. You'll fall under the purview. So natural persons, individuals, and legal persons are potentially taxable persons. Let's look at natural persons. Like I said, I don't care where you're living. Anybody who's an individual living anywhere in the world, if you are undertaking an activity that requires a trade license in the UAE, then you'll fall under the purview of corporate income tax. If you are an unincorporated business, so if you run a business as a natural person, not through a company, as an individual, if you run a business as a sole proprietor, or if you're a partner in an unincorporated partnership, you are likely to be subject to corporate income tax on your income, guys. Anita, absolutely correct. Double tax relief and double tax treaties will apply. So the legislation has made that very clear. If you're not based in the UAE, if you're based elsewhere, and if your worldwide income is subject to tax in another country, but you're undertaking activities in the UAE, your UAE income is also subject to UAE tax. And of course, that income might also be subject to tax in the country where you're resident. I've got some good news. Double tax relief is available to such individuals. And again, that is part of the program. So I agree. There are lots of tax treaties with the UAE and the rest of the world. And the Federal Tax Authority have made it very clear that they intend to follow that particular treaty legislation. Now, I think I made this clear. Guys, let me make this point clear. If you're an individual in the UAE, running a business, carrying out a business activity, only the income from that activity is subject to corporate income tax. None of the other income is. None of the other income. So if you get some interest income, dividend income, any other form of passive income, if you receive rental income, if you receive a salary, for example, none of that is subject to corporate income tax. All right, let me just make that clear. No tricks there, guys. It's been made clear by the FTA, like it did in the public consultation document, that there is no intention to parallelly tax any other income of the natural person. Remember, a natural person is effectively a human being. It's an individual. Yeah, so that is not the intention. Only the income derived from your business activities through a sole trader, or if you are, let's supposing, a freelancer and you have a trade license, only that income is subject to corporate income tax. Nothing else. In essence. Now, but if it's a legal person, just give you a storyline. Guys, this is what the UAE FTA has said. FTA said there are two types of legal persons. One, resident in the UAE. Now, how do you know that you're resident in the UAE? Yeah, good question about bad debts. Umair, I just want to make this point clear. If you have trade debts, so if the debt is a trade debt, that debt would have been incurred wholly, exclusively for the purposes of your trade, then that expense would normally be allowable for tax purposes. So to answer your question, bad debts can potentially reduce your taxes, but it depends upon the nature of the bad debt. As long as it's a trade debt, and again, that is a point of discussion later on. I hope that helps. Yeah, so trade debts can be. Absolutely. So unfortunately, any debts prior to the or any information, losses, expenses suffered by the business prior to their first financial year is not deductible. So unfortunately, you can't carry forward any bad debts, expenses, losses of a business incurred prior to the first financial year. Again, that's something that I'll talk to you about, but that is the general theme. Again, there are some clarifications that we are awaiting. Yeah, if the debt's been written off in your accounts prior to the introduction of the corporate income tax, but prior to your first financial year, if the debt has been written off in your accounts, then I'm afraid to say that expense is unlikely to be allowable in the first year. If it's not written off, then I would say that it's not a bad debt, it's a doubtful debt. There is a potential of a relief being available. But again, I don't want to go into too specific details. Just please be aware, bad debts are, if the bad debt incurred prior to the introduction of the legislation, it is unlikely to be allowable. But there are some nuances. It depends on whether it's been written off or not. We'll talk about that. If it's just a doubtful debt, the treatment will be different. So provisions for doubtful debts are treated separately than actual debts written off. I hope that kind of helps you. So Diaz asked a really good question. Do the financial statements need to be audited by external auditors? The answer is not sure. The chances are, and again, this is subject to a cabinet decision. The cabinet will decide on what sort of businesses might need to have their accounts officially audited. I would assume certain corporations of a certain size might need to, but natural persons may not need to. Umar, the cabinet will, I'm hoping, decide shortly. We don't know yet. There isn't a fixed date. I believe the public will be informed as and when. I'm hoping a lot of the things will be made clear prior to the official kickstart date of the legislation. So I would say the next 6 months would be really busy for the release of certain information. But we've got quite a lot of information already that we can build a case on. Yes, Arsalan, you ask another good question. What happens if you have a subsidiary of a parent company which is not resident in the UAE? It's in the GCC. I'd like to just make this point clear. If there is a legal person, and if that legal person is conducting a business activity in the UAE, then that business activity in the UAE will be subject to corporate income tax. That's the general rule, irrespective of the parent company ownership. There are some other benefits of parent company ownership being in the UAE or outside of the UAE. For example, tax grouping is effectively not possible if the parent company is not a UAE resident company, but that's a separate issue. But to answer your question specifically, any company, any subsidiary or a branch of a foreign company in the UAE conducting a business that requires a license, etc., is subject to tax. Yeah. So I'll just carry on and I'll see if I can pick up questions later on. So guys, legal persons, just to make this point clear, is a legal person resident in the UK? Yes. If you are incorporated in the UAE, you are UAE resident, effectively, a legal person resident in the UAE. If your company is not incorporated in the UAE, but it's centrally managed and controlled from within the UAE, what does that mean? You might ask me. Well, guys, things like where are the management decisions, the senior management decisions, where do they take place? Where do the board reside? There are lots of little bits and pieces that one considers. The most important one being, where are the key decisions of the company taken place? If they take place in the UAE, then that company, even though not incorporated in the UAE, is likely to be UAE resident and therefore subject to tax. Now, to answer the question that Arsalan has asked, if the legal person is not resident in the UAE, what does that mean? It's not centrally managed and controlled from the UAE, and it's not incorporated in the UAE. It's a foreign legal entity. Then, guys, that foreign legal entity will still be subject to UAE CIT if it has a permanent establishment in the UAE, i.e., a branch or an office, a factory. Those are your very classic examples. These are branches, offices, factories conducting business in the UAE. So basically, any income earned from a permanent establishment, such as a branch, will be subject to CIT. They've also included sourced income. Now, the sourcing rules are really vast, guys. Basically, any income earned by the foreign entity in the UAE, sourced, so interest, dividends, all of that particular items sourced in the UAE could fall in the purview, although the tax rate at the moment is 0 on that. And if they have a nexus in the UAE, the nexus is still to be defined by the cabinet decision. Yeah, Arsalan, you're quite right. That is it. So it is clear. You have a PE, it'll be a base. You've got it, Arsalan. You've got it. I've already mentioned this. I don't want to go into too much details. What do I mean by PE in the UAE? Guys, basically, a PE is a branch, a factory, a building, which conducts activities in the UAE, all right? And it applies to both branches in the mainland, branches in the free zones. Just please be aware, if, however, you simply have a warehouse in the UAE, which is a building, the chances are that warehouse may not qualify as a permanent establishment. Why? Because, guys, if it's just used as storage facilities, if it's auxiliary or preparatory in nature, then it's unlikely to qualify as an activity. Minor point. Again, details will be discussed in the course. What else is a permanent establishment, guys? If you don't have a physical presence in the UAE, but your activities are carried out by an agent in the UAE, and that agent is dependent upon the foreign PE for advice, for sources of income, etc., then that would be a PE. Yeah, Umar, that's a really good question. In terms of consulting services, it really depends on where the place of supply is, Umar, and it depends on whether that parent company is in the GCC or in rest of the world. So I don't want to go into too much detail, but the answer is, again, expenses can be deductible as long as they are wholly and exclusively for the purposes of trade, and as long as they follow the correct arm's length principle. That's all I'm going to say at this stage. That's a really good question, but I'm hoping that somehow or somewhat answers your question. I've told you about UAE sourced income. It's any income that you get from any UAE sources. So if you have a UAE bank account, you might get interest on it. If you have a rental property in the UAE, you might get rental income on it, dividends, so on and so forth. Currently, I've got some good news. If you're a foreign legal entity and you have UAE sourced income, the current rate of that income is 0%. But there is a rate. So once a rate has been released, that rate could change subsequently. At the moment, withholding tax is 0% on that sourced income. Now, free zones. Last thing, guys. I'm conscious of the time. And then I'll tell you what we have on offer. Guys, a lot of people ask me about free zones. Guys, currently, let me just tell you, the public consultation document released quite a lot of information about free zones. A lot of them have been adopted in the decree law, but there are some significant differences. Firstly, I'd like you to just be aware, according to the FTA, if you're a company registered in a free zone, you could continue to benefit from the usual tax holidays given by the Emirati, depending on which free zone you're in. You still benefit from that particular tax holiday. However, you still have to file a return. Every company has to file a return, right? That's quite important that you realize that. Ghana, I'll make that clear. You'll definitely get this presentation and you'll get this recording as well. Everything that I do today will be available. We will send that to you all as an email. I think we have your email addresses. All of it will be sent out to you, I'm hoping, by the end of tomorrow. It'll take us 24 hours just to get everything done. So, guys, let me just make this clear. The latest legislation simply says if you are a free zone company, you will continue to benefit from the tax holiday. What does that mean? 0% CT rate, guys. Only on your qualifying income. Now, what do I mean by qualifying income, or what does the FTA mean by qualifying income? Guys, it's subject to a cabinet decision. That's really important. They've also said that if you have dealings with other related parties, then as long as the arm's length principle is been applied, you could still benefit from the public holiday. Again, we'll discuss that on the course. You have to meet any other conditions prescribed by the minister. You must maintain adequate substance. Now, some of you might be aware of the economic substance rules. Guys, that's very simple. By the way, if you're a company in the free zone, you can't just set up a company in the free zone to benefit from the tax holiday. There has to be an economic substance reason for it. So what does that mean? The majority of that income, where does the main income for that business come from? Does it come from the state? Do you have adequate resources in the free zone? Where is the activities managed and controlled from? There are lots of little bits and pieces that you have to follow. So I'll repeat, free zones companies can benefit for the remaining part of their free zone period, which is around 50 years, for whatever is remaining with the tax holiday on qualifying income, as long as transfer pricing rules and regulations are followed, as long as the free zone company maintains adequate economic substance, as long as they meet any other conditions that might be prescribed by the cabinet ministers, and of course, as long as the free zone company has not elected to be subject to corporation tax at 9%. That election, ladies and gentlemen, is irrevocable, and it's important to realize whether you should or should not make that election. I know some businesses that find it very difficult to separate their activities from their free zones and other connections, and they are considering applying the corporate tax rate. So they're considering electing to be subject to corporate tax. We'll talk about that storyline, when you should, when you shouldn't. No, so Dia, I would say qualifying income is not confirmed yet, but yeah, the ESR rules does apply to it. So the economic substance rule is slightly different. The economic substance just tries to check that you haven't set up a company in the free zone simply to avoid tax. That's what the economic substance is trying to judge. Do you have any economic reason for being located where you are? Where are you managed and controlled from, right? Where are the activities managed and controlled from? Where are the main activities derived from? Do you have adequate resources in the free zone? Or have you just set up a company without any adequate resources in the free zone? If you do that, then you're not going to be benefiting from the tax holiday. And then the next important point is, where is the income being derived from? Is it being derived from free zones, or is it being derived from the mainland? So there will be qualifying income, and that detail will be subsequently released. What income earned by that free zone income company qualifies for the 0% rate, which one doesn't? All in the air. Now, I'll tell you what this slide is. Guys, this slide was in the public consultation document, and things have changed. In the public consultation document, they made a distinction between income benefiting from the tax holiday and income not benefiting from the tax holiday. However, in the decree law, it simply mentions qualifying income. So there's a lot more detail that we need. Also, this was quite strange. In the public consultation document, it said, if a free zone person earns any other income from the mainland, all of the free zone's income could be tainted, i.e. subject to corporation tax at 9%. But according to the decree law, that's not the case. According to the decree law, this point was not highlighted. This point was not in the actual law. So I believe if you're a free zone company, if you have qualifying income and not qualifying income, now the details will be described by the cabinet decision, you will need to be able to separate those items. There has to be a clear distinction between preparing accounts for not qualifying and qualifying. The details will be released, but the good news is not all of your income will be subject to corporate tax. Your qualifying income will still benefit from the tax holiday. Your non-qualifying income will be subject to 9%. So it'll be very important for us, once we know what that income is, to be able to prepare yourselves as a business to segregate these activities as best as you can. If you can't segregate them, make sure you apply the adequate transfer pricing legislation to make sure transactions between the unsegregated version is at arm's length. These are really important considerations, guys. Now, what are we doing about it? 5 minutes of your time. Guys, let me make this clear. Kaplan is running a diploma. It's an internationally accredited diploma. I can't name the institution because we haven't got the accreditation just yet, but we are on our way for filing and approvals. So it's not an issue, but it will be internationally recognized. And for those of you who've done VAT, you know how this works. My qualification, this diploma, your diploma will have 3 stages. The topics are the topics that have been highlighted in the legislation. So I have written out the major topics that we will be covering in each stages. There will be progress tests that you'll have to follow. you have to pass a progress test, get around 60% in the progress test for each stage in order to move from one stage to another. You will then get a mock exam, a revision day, and you'll have to do a final exam. On completion of the final exam with a minimum mark of 60%, you should be entitled to that particular diploma. That's my plan, guys. There's a lot to do. Now, let me tackle a couple of other problems. So, by the way, this is the journey. My diploma or your diploma will last around 7 to 8 days. All right. So it's 7 days of tuition and revision and a day set aside for the exam. The topics that I've just discussed, I'm not going into the details, but I will share this presentation with all of you. All of these topics will be discussed in detail. So everything that you need to know about the legislation as it stands will be covered on this course. Let me make that clear. You guys know we did this for VAT. Secondly, and this is very important, a lot of the legislation will be released subsequently. Not legislation, but if you like, decisions, clarifications will be released subsequently. Let me just tell you what I'm including for all of you who get onto this course. You will have access to our learning management system for 12 full months from the start of the program to the end of the program. Any legislation or decisions released by the relevant authority, if it is of importance, I will upload that onto the LMS with practical examples for all of you booked on that program, so you don't miss a thing. Number one, every time a major decision is released, and if it impacts the corporate income tax legislation, I will release it. It will be available for you in one place, and I will send out an email telling you all, please review it. And of course, if you have any questions, it'll be around. So for full year, you get access to our learning management portal, which will have regular updates as and when released. Also included in the fee will be CPD days. What do I mean by CPD days, guys? Is effectively, I am going to get you guys to come in. It'll only be on a weekend later on in the year when more and more bits and pieces are released. And I'm going to give you guys a face-to-face update on any further impacts that anyone might have for their businesses from a academic point of view. All right, like I said, we don't give tax advice, but we can definitely tell you how the decision could impact the thought process or what you should do from a regulatory point of view, not from a tax advisory point of view. That's not what we do. But I like to make that clear. 12 full months of access, one place to get all the updates. Nobody else is offering this. I'm sure somebody might offer this now that I've mentioned this. Also, you'll have days that you will come in. I will organize that days for everybody. It'll only be on the weekend. Let me make that clear. Or in the evenings. It'll never be during the day because you all work. I know that. I know that. And where we need to sit down and discuss any documentation, all of that will be done throughout the next 12 months, guys. So the course discusses all the important legislation. There's a lot being released. Anything that subsequently gets released, I will share that with you on our learning management system. I will do a recording. My team will do a recording with practical examples. And then we will come back and do maybe a face-to-face day or a live online day later on in the year when more things have become clear, if that is necessary. Let me make that clear. And it's all included in the fee. So this is the program based on the legislation. It's 8 days long. It starts on the 15th of January, ladies and gentlemen. And it's not going to be every Sunday. It's going to end around the 30th of April. And the reason why we have gaps is because, as you all know, there is a Ramadan and Eid holidays in the middle. So I want to make sure that we stretch it. And the stretching makes a lot of sense. It gives you ample opportunities to ask us any questions that you have in relation to the legislation, ample of opportunities. And of course, as there are updates released by the FTA, we will cover that as well. Yeah, all of that will be covered on this program. Like I said, you all know how this works, don't you? The training is available face-to-face and live online. So the program that we are running, if you can't come into the institute to Kaplan, we have a lovely center in DIFC. Some of you have been there. It's called Rolex Tower. It's a lovely brand new setting, very comfortable, great for learning. If you can't come into the center, you can get onto the program online. Yeah. So you have lots of options available. And here is the beauty of it, guys. I'd like to make it clear. This internationally renowned diploma is available for 6,500 AED. Having said that, watch out this space. For all of you who registered for this particular webinar, you will receive a discounted price. And that will be mentioned in the recording and the presentation that I will be sending out to you. Please bear with me. It'll take 24 to 48 hours maximum. So the price will be even lower. Let me make this point clear, guys. You cannot find an internationally recognized or renowned diploma for that amount. I said this to my VAT guys as well. My aim is to give you the best possible education of the legislation at the most affordable pricing that we can do. Let me make that point clear. I know some of the competition are charging nearly twice the amount. Let me make that clear. All right, so this is what we have on offer. We also have a very good VAT diploma, very good for those of you who have been part of that journey. A lot of you are on this webinar. I want to thank you for doing it. I think you can vouch for it. It was a really good program. So for those who want to do corporate tax and VAT, we have a combo special price of 8,500 dirhams. So for 8,500 dirhams, you get VAT and CIT, internationally recognized diplomas in the UAE. Enough said. Guys, a lot of you have posted your questions already, and the reason why I've run over time is because I was trying to answer them. I'm hoping you found the presentation useful, guys. I'll tell you what's going to happen next. Let me make it clear. I will be sharing this presentation. I will be sharing what the special offers are with each and every one of you. You will also have the contact details of our team. If you're interested in the program, to book on it. Let's start the journey together, ladies and gentlemen. Let's start the journey now and get ahead of the regulation. And I promise you, let me make this clear. I promise you, and you guys know that I stick to my word. As legislations or new amendments are released, I will make sure that you have access to all of that through the learning management portal. You will have access to it for a full year. Let me make that clear. And we will do further down, further in the year, catch-up sessions, face-to-face, live online, on any other implications that get released subsequently. Legislation will keep changing, guys. Somebody asked me, why are you doing this so soon? Let me tell you, VAT was released in 2018, guys. And even today, there are amendments to the legislation. So these amendments will keep going on. There's no reason why we shouldn't get ahead of time and start the business of understanding the legislation as it impacts us now, as soon as possible. Guys, I really want to thank you. And I'm sorry if I sound a little bit nasal, and I'm sorry if I sound overly excited, only because I am. This really is a really good opportunity, guys, to get on board. All right. Guys, thank you so much for your time. Can I also say this? If you think of a question later on, we will give you, when we send you the presentation, we will give you an opportunity to ask us questions further on. You don't have to ask us now. So guys, thank you, Swati, Rama, Mumtaz, Sri Lakshmi, Ali, guys, it's so good to see you. And I'm sorry if I sound a little nasal. Nita, my pleasure. Fatima, Mohammed, and in fact, I missed some of you because the names are flashing through the screens. So I apologize for that. If I haven't thanked you individually, I genuinely mean it. Guys, watch out this space. This is it. We have the opportunity of getting ahead of the CIT legislation, and I want to work with you all on it. Happy New Year again, Mirna. So good to have you on this. I hope you're doing well. I hope all of you are doing well. Guys, thank you for listening. Thank you so much. All the best. Stay in touch. Look out for an email, guys. We will be sending you this information very shortly. In the next 24 hours, you'll get everything you need. The presentation, the structure of the course, the discount, how to enroll, everything. Take care, guys. Thank you so much. All the best. Goodbye, guys. I'll leave the details on the screen if you want to get in touch, but that's about it. Cheers, Dima. Take care. Bye.